Welcome to Let's Talk Money, the show that empowers you with knowledge about personal finance and investing. I'm your host, Stephen Libman, and today we have an exciting episode lined up for you. We'll be diving into the world of health savings accounts, or HSAs. But just before we do that, I need to tell you and give you a reminder. If you are ready to start your new life with money and investing, then you need the 5 insights for making better financial decisions, the completely free guide that you can sign up for and enroll at today at stephenlibman.com. Now, let's discuss what the heck is an HSA and how we might be able to hack one to make it even better. Remember, money moves or it dies. So you might be wondering, what's an HSA and why should I care about it? Well, my friends, HSAs are a powerful financial tool that can help you save money, especially when it comes to managing your healthcare expenses. In the next several minutes, we'll explore the incredible benefits of HSAs. One of the most significant advantages of an HSA is, without a doubt, its tax benefits. When you contribute to your HSA, those contributions are tax deductible. It means that you can reduce your taxable income for the year, which can lead to significant savings during tax season. Plus, any interest or investment earnings within the HSA are totally tax-free. And guess what? If you use those funds for medical expenses, they are completely tax-free as well. HSAs allow you to save money for future healthcare expenses that may not be covered by your insurance. Think of deductibles, co-payments, and even elective medical procedures. The best part? The funds in your HSA roll over from year to year, so you can build a substantial balance over time. With an HSA, you have control over how you use the funds. You decide when and how to spend the money on qualified medical expenses. Plus, HSAs are portable, meaning you can keep your account even if you change jobs or health insurance plans. Pairing an HSA with a high deductible health plan often means lower monthly premiums. This can save you money on your monthly insurance costs, putting more dollars back into your pocket. And if you're lucky, your employer might even contribute to your HSA. And that's like free money. Some companies match your contributions, which can provide additional funds for your healthcare expenses. Now, welcome to the Investor Insights segment. Now that you've got an idea about HSAs, let me roll out some other details for a much bigger picture. You see, some HSA providers offer investment options, allowing you to potentially grow your HSA balance over time through investments like stocks and bonds. And here's the kicker. This investment growth can be tax-free, as long as you use the funds for qualified medical expenses. HSAs can also provide a financial safety net in case of unexpected medical expenses or emergencies. It helps you cover healthcare costs without relying solely on your regular income or going into debt. Did you know that after the age of 65, you can withdraw funds from your HSA for non-medical expenses without penalties? While regular income tax applies, this effectively turns your HSA into yet another retirement savings account. Remember, if you want notifications of when I release new episodes, you can simply hit the subscribe button. And if you want the 5 investment insights for making better financial decisions, please visit stephenlibman.com. You can also leave a review and follow me on LinkedIn at www.linkedin.com/in/Stephen Libman, or, as I said earlier, just go check out the show notes. So what are the myths about HSAs? What are the concerns and what are the presumptions that people make? Well, one common myth is that HSA funds expire at the end of the year. In reality, HS funds roll over from year to year and they can continue to grow tax-free. One common myth is that HSA funds expire at the end of the year. In reality, HSA funds roll over from year to year and they can continue to grow tax-free. Some people believe that HSAs are only beneficial for healthy individuals. In truth, HSAs can be valuable for anyone, as they can help offset both routine and unexpected medical expenses. Some people think that HSAs only offer limited investment options. However, many HSA providers offer a range of investment choices similar to a 401k, and stay tuned because when I get into a couple of hacks a little bit further on, I'm going to sort of open that topic quite a bit. Many worry about penalties. While it's true that HSA funds are primarily for medical expenses, individuals over the age of 65 can withdraw funds for non-medical expenses without penalty, though regular income tax would apply. And do be careful not to over-contribute. Probably the biggest fear is that of not understanding how HSAs work or how to manage them can deter individuals from opening an HSA altogether. Isn't that exactly why you're here? What would this show be without a little wealth wizardry? Let's see if we can't level up your HSA with a few hacks you may want to consider. Number 1, create a self-directed health savings account so you can have investment choices beyond simply stocks, bonds, cash, and mutual funds or ETFs. But you can also include such things as real estate, private lending, precious metals, and other many different types of investing options. Number 2, pay your healthcare expenses out of pocket while you're still earning money and save the receipt for later. Since there's no reimbursement timeline, you can reimburse yourself whenever you want. Let's say you want to reimburse yourself in 15 years from now. You can while you have let your money grow inside your HSA all that time completely tax-free. Let's look at an example. If you contribute just $200 a month to your HSA for 30 years at a 10% return, that will grow completely tax-free and become $1.3 million at age 70. That's pretty powerful. You can also make a one-time transfer of the annual limit from your IRA to your HSA, making that portion of your IRA completely tax-free as well. And one other thing. If you are 55 plus, you can make an annual, that's right, annual $1,000 catch-up contribution. And if your spouse has their own coverage, you both are eligible for the extra $1,000 per person as an annual catch-up contribution. Consider this, if you have a family plan, it will just be the $1,000 once annually in total. Now, this podcast is for informational purposes only and should not be considered legal, tax, investment, or professional advice. You should always seek input and guidance from vetted licensed professionals. There you have it, the incredible benefits of health savings accounts. Whether you're looking to save on taxes, build a financial safety net, or invest for the future, HSAs offer a wealth of opportunities. Thank you for tuning in to Let's Talk Money. If you found this episode helpful, please subscribe, rate, and leave us a review. It helps us reach more people just like you. And if you've got any questions at all, let me know on LinkedIn at www.linkedin.com/in/Stephen Libman. Remember, money moves or it dies.